A very good morning, everyone. I hope you guys are amazing. Happy New Year and welcome back from the holidays. I hope you guys stayed safe, had some time off, took some time to relax, rejuvenate, and get back to your full spirits. It's a brand new year, brand new opportunities. And of course, we are ready to take you through. So feel free to always check into the variety of services we do offer, from classes to webinars, to different workshops and your different respective locations. First and foremost, I would like to run over a risk disclaimer. Whatever is offered here is not financial advice, but you can use it to at least supplement on your analysis or on your market insights. And don't forget to do your due diligence before you take any trading decisions as well. Once again, don't forget to share. You can always share the lives and the market snapshots with a friend or two with your communities as well. And then you can be able to, of course, go ahead and try to discuss some of the insights shared on these different sessions and see how best you can be able to help each other out, or they can be able to benefit each of us. So other than that, as usual, it's always very important to start every trading day with your looking at your market, looking at the macro side. So it's very important always start up with your trade. Some use Forex Factory, some use trading economics. You can as well use equity to see what news events are most likely going to drive that day. So usually I like using trading economics. I can look at Forex Factory, and also of course our equity trader does have a Forex calendar. This is very crucial because of course the macros or these news events tend to cause a lot of volatility, and we did have some kind of news events, major news events last week where they ran from payrolls with a figure coming out of about 50,000 jobs added in the American economy. And what that basically means is that fewer jobs were added to the American economy between December to January, and that's always bad for the US economy. So what we expect in those case scenarios is that dollar becomes slightly weak, and of course the pairs that are traded against the dollar will be relatively stronger in that regard. So going into this week, today is Monday 12th, of course, January 2026, and later on at 4 we do have a speech from Jerome Powell, who is the chairman of the Federal Reserve Bank of the US. We do have ECB, ECB's Dave Windows speech at 11:50. That's in about 40 minutes from now. We do have a Centix, this medium impact Centix investor confidence, and then a Bostic speech. So usually what happens is that these governors from different banks will come to give some statements, usually to try and encourage investors or to give them a way forward with the currencies or different currencies every after a major news event, especially when the news events that are auditor releases didn't meet the market expectation. For example, our weakening labor market, Jerome Powell may want to come out and strengthen the American people where the stance is for the American portrait in the US dollar and its currency, or investing into it majorly. So we shall be having that speech at 4 p.m. I think that's all we're going to have for today. On Forex Factory, you can see we don't have any news events added up there. When you come to trading economics, I'm going to just toggle this to medium impact and this as well. So you can see Monday, let's see. And okay, let's have this. We don't have any major news events that are high impact when it comes to this case scenario. When you go to medium impact news events, and once again, it's just the speeches from the different governors, 2 speeches from the US. Then, of course, this is India inflation rate year on year. For guys that trade some of those Indian indices, I don't know if they're called that trade them here, the Nikkei and those. But the guys that trade them, of course, have an inflation rate coming in from that side as well. All right, so that's all that you're having from the calendar, the Forex calendar. It's very, very important to always look at your Forex calendar just to know when to be in the market, when not to be in the market. And of course, also helps you to know that when the volatility is going to be in, you need to be very, very strict on your risk management. It's very, very important. So when you come in and look at some of the different headlines that may be moving in the Forex markets today, we can have a headline right here that's in with a picture of gold on it, and it says gold hits record high on safe haven demand. So it said gold climbed to a record $4,480 on Monday as safe haven demand rose amid concerns over the Fed independence and geopolitical risks. So Chair Jerome Powell said at the Justice Department probe into headquarters cost overruns was a pretext for President Trump to push to pressure for the Fed to cut rates. Then silver also jumped off 5% to a new high. So anyway, just to break this down a little bit, some of the things driving the safe haven demand or gold demand right now. What we have in the article here, they're talking about basically geopolitical tension. So you can see what's happening with Iran as well. Iran, there's been Venezuela with the whole oil saga and Maduro being captured. So of course that will majorly affect oil. But remember, not all investors are going to be, how do I call it, risk-on investors. Some will be risk-off. So what they will do is they'll get their money from some industries that they feel will be affected. Then they'll put in gold, of course, before some of those geopolitical tension or those geopolitical events spill over different industries. For now, Maduro's capture will focus entirely on oil. We're looking at probably Venezuela when they begin oil production back in 2013, 2012, 2013. They were contributing 5% to the global oil supply. And of course, after Maduro took over power in 2013, later in 2013, that changed, and they've eventually been adding on to the world global supply. But what that would happen is if they resume extraction and selling of oil from Venezuela, of course, we expect the global supply to increase, which means oil prices will go down. And of course, we did see Trump meeting with major oil investors in the US a few days back to try and discuss how they are going to, of course, start extracting and, of course, selling Venezuelan oil, which has been sanctioned for a long period of time, of course. So that would be a good sign for gold. But of course, very many investors will now take their money out of oil-related industries for now until the waters are more calm and they're going to put it in a safe haven. That can be one of the things driving it, as well as the Iranian geopolitical tension as well. On top of that, we did see sometime last year, I think around October, when Trump went to visit the construction of the Federal Reserve headquarters, and he actually was forcefully showing Jerome Powell that, you know what, you're exceeding your budget. You're now twice more into your budget. You're going to, I think, about $3 trillion in the costs, which was way over the 1 trillion dollars. And here Jerome Powell, of course, said that Trump was trying to use it to push him to cut rates. So also that silver jumped to a 5% new all-time high as well. We're going to look at those in the charts in a bit when you get to them. Then some other headlines you can look from here. Okay, the dollar falls on Fed independence concerns. That's similar to what we have just been seeing on gold. European markets head for subdued open. European equities were set to open little change on Monday as investors weighed geopolitical risks and economic concerns over the US Federal Reserve's still independence. So there's nothing much really running the market today. So you're going to realize that most of these headlines are running back to the same similar things. So with that having been said, I think it's about the right time that we can now go back and look at our technical analysis and see where the opportunities are definitely going to be lying in the markets. So let me just do this and then get my MT5 chart on in a bit. In the meantime, don't forget to take advantage of the Caribou bonus out there. It's a brand new year. One of the things you would like is, of course, starting with that beautiful bonus that can help you increase, of course. It basically just gives you more margin to trade with, which means that you can easily make more money with higher capital. Of course, an untradeable bonus, but as I said, it increases your margin. That helps you a lot when you're accounting for your risk management. So go ahead, if you don't have an FXPesa account, check the links in the description. Create your FXPesa account today and enjoy the Caribou bonus. That's a 100% deposit bonus on your first deposit, of course. And yeah, and for those of you who are interested in learning deeper into the markets, or you know a couple of beginners out there who need to know where exactly to start from, and they want to know what exact information they need to start trading, we do have beginner classes happening Monday to Thursday, 8 p.m. And the links are in the description as well, or you can look for the link in bio on our different social media platforms. In case you're looking for new strategies, trying to refine your strategy, trying to figure out why you're not grasping certain parts of your strategy. Could be the psychology, could be your risk management. You can as well sign up for our intermediate class. That's the 11 a.m. session or the advanced class as well, 11 a.m. Monday to Thursday. And the links for it are also in the description or in any of the links in bios on our different social media platforms as well. So feel free to take up any of those. And of course, for the advanced traders, most of them, we do have special webinars that come in and shall be updating you. So you can always check out those links in bio to see all upcoming events, from webinars to events in different locations, even our physical classes in Uganda and Tanzania. We do have the links in those descriptions and in the bios as well. And the beauty of it, after you sign up below there, they'll always give you a kind of like the location. But still for Uganda, it's Ruby Building, 7th floor, and Tanzania, FNB House, Dar es Salaam, on the 3rd floor. So we have our MT5 up, and of course, if you have some currency pairs you'd like us to look at, feel free to put them down in the comment section. Then we'll go ahead and have a look at some of those currency pairs and what they're basically looking like going into a brand new week. So I'm going to start off with DXY, or the dollar index. So I'm going to just want to change this up a bit, change up the template on this. Okay, not that. I'm looking for a proper template. Okay, it's not one. Let's go by this. So as you can see, this is the dollar index on the daily time frame, and it has been pushing to the upside until, of course, Friday, when you saw that 50,000 jobs being added in the American economy, which was less than the previous non-farm report that came out, and also lower than the forecast, which basically means it's bad for the US dollar. So what would you expect? You'd expect the US dollar to actually push down a little bit based on how bad those figures look like. So when you look at this carefully, you realize that what had price done, it had given us a high, and then a low, and then a higher high, right? The market came and give us a higher high right over there. So what do you expect after price gives a breakout? You're always going to expect price to give you a retracement. So this is our breakout or our breakout structure, and this is a valid breakout structure because price eventually closes above that high. Now, after seeing your breakout structure, because price came from a higher high, we anticipate a retracement. We can say there's a demand level right before this breakout. That means this demand level is actually the one responsible for the breakout, right? So if this demand level is one responsible for the breakout, the anticipation is that price is most likely going to come back and retrace into this zone here. So we're seeing a bearish movement on the dollar index, and we expect it to push into this zone before it goes any higher in that case scenario. So we're looking at a push into this zone and a push to the upside in order for the dollar to keep on its recovery, right? So I'll be honest with you guys, on a personal perspective, I expect the dollar index or the dollar currency to gain strength as we go into that. Of course, the first month or the first 3 months, you can call it the first quarter, may be a bit slow. But given the events that are meant to happen in the US this coming year, things like the World Cup, and of course, when Trump's deals start now bringing actual business, right now they've recorded about $10 trillion that has actually been invested in the US. But remember that the tariff deals is saying we're going all the way to about $70 trillion, but only 10 trillion has been committed so far. So when you see many of these things starting to roll in, we expect that dollar to gain. I expect that dollar to gain much more value as we go down there. Of course, the World Cup being the major driver for business in the US. So I expect that dollar to recover a little there. So I'm still very bullish on it for the larger part of this year. So that's why I will be looking for price to come in here from a higher low, then continue pushing into the upside. So it's the dollar index, and we shall basically use this perspective to trade dollar related pairs. So eccentric Elma says, what's your insight on USDJPY? We are going to look at that in a bit, of course. USDJPY. So since the dollar related pair, I think I'll start with that as eccentric has requested. So you can come through and look at the dollar index. Sorry, you can look at USDJPY. So get this template. I think let's not use this template. Let's still use this. So I'd like to build this tool from the daily time frame. So of course the JPY has been a bit weak, or the JPY has been a bit weak for quite a period of time. It keeps recovering while still continuing to weaken. So the dollar has relatively been stronger compared to the DXY, but you still expect some kind of correction moves happening. So what you can notice with the structure in DJPY, these are daily time frame structure. We can start, we have been very bullish on this, right? We have been very bullish. Price came in, gave us this push to the upside, gave us a break here, where the demand and price continues pushing to the upside as well, as you can see. So price has been pretty bullish on this. You can look at the most recent breaks of structure price gave us. Price came and formed this high. We haven't quite taken it out well yet, but you can see price gave us a sweep, right? Kind of like a sweep above this high. So usually in this case scenario, price will want to come back down into a demand level before it continues pushing us to the upside. So what am I going to look out for? I'm going to look out for the demand levels around this area. Now, this being a daily time frame, it's usually going to be hard to pick up our demand levels in the same particular time frame. So what can we do? I'm going to just mark out this zone here, as you can see. Then I'm going to drop down to a 4-hour time frame, then a 1-hour time frame, and see if I can come up with a nice demand level, right? If I can come up with a nice demand level. So when I drop down to this 4-hour time frame, I'm actually able to see a demand level. Let me just zoom that in for you guys. So coming down to the 4-hour time frame, we are able to single out this demand zone here that price offered us. So I want to mark it well, so I can mark it from there well. So it's the demand level price offered us. So price has the possibility of pushing all the way down into this area here. Then you can look for buy case or for buying opportunities. So that question comes in, what if price doesn't come down? Because we have seen that already bullish. Now the idea that price is already bullish means sometimes price will just create liquidity before it actually comes back to these extreme levels. It's something I tend to call liquidity conveying. Price can have an area that looks like a fresh, nice area to take from an opportunity, but then it doesn't directly come back to it or like immediately come back to it. It can first continue pushing to the upside and even take like 1 year before it comes back to that particular area of interest. That's a concept that we call liquidity conveying. It's like saving some money aside in a bank, and you're like, you know what, I'm going tomorrow to go and do some shopping, but let me first put this $30 in a bank, then I go do the shopping. So you're conveying that money in your bank as you're going to do shopping. So when you go to do shopping and then you realize that the money you went is not enough, then you come back and pick this other money. It's because you had conveyed it. So this is called liquidity conveying. These demand levels are areas of liquidity, so price can come them and potentially buy, but sometimes price will convey it, right? So that's what price did here, created a demand level here. So right now it's trying to use this demand level to see if we can have more buyers coming into the market, right? We're trying to see if there are more buyers that can pick up from here to continue the push to the upside. So if price happens to use this area to continue buying, then this area will be conveyed. It means it's still an active overhead area, but price may not use it now. But what happens when a price conveys in this nature here, it gives us a demand level out of our breakout zone, but then it tries to respect this area. What am I going to do? I'm going to look for the nearest resistance level. And what I want is that after price respects this demand here, I need price to break out over resistance or over major key high to confirm that price actually using this area to convey liquidity, using this demand level to convey the one below here. So for me to take a trade based off this demand level, I need price to come and break above this current resistance we're seeing up here. So I'm going to go down to a 30-minute time frame so that we can actually look at that resistance there in a clear way, right? So you can see a clear resistance. So we are seeing that price is using this demand level here as a conveying area to convey the one below here. But for this area to actually be a successful area or convocation area that price is using to convey the one below, price has to break above this resistance. And you can see how price has created a neat resistance. These are the kinds of things you look in the market and you have to be peculiar about them. Price has created some kind of neat resistance. So we need to look for buying opportunities after price using this area or the area has to convey. I need price to come and break above this resistance. Then of course I'll wait for a resistance or a retracement from which I'll pick up on that push to the upside, because already we have the idea that USDJPY has been bullish and is in an uptrend, and it's most likely going to stay like that for quite a bit of time as well. So if price fails to break above this resistance, it will definitely come back down here. But what I would be keeping in mind is looking for the best possible opportunities. What are my best, or to what direction do I have a bigger advantage to the upside, because price has been bullish. So that means if price breaks below this demand level here that is trying to use to convey, I want to look for selling opportunities. Instead, I'll wait for its demand level below here to look for more buying opportunities when price gets to it, because it's the ideal buying area based off market structure. So this USDJPY, I'm looking out for one of the two things. Either price is going to break above this, give me a nice correction move, and then continue to the upside, or price will break below this, come all the way to this demand level, and then we want to look at our price push that area there. So of course, all these should be coupled up with either confluences or confirmations. Now that's very, very crucial, very, very important. I always advise you to have at least three confirmations, because the market will keep on offering different confirmations in different case scenarios. Don't always offer you like one confirmation, which is a problem, right? Which is a problem because many guys, in most cases, someone can say, okay, if I have an area, let's say a support or a resistance, and every time price comes there, it should give me, let's say, how do I call it? If I have a resistance, what put a bearish engulf, I'm going to look for selling opportunities. Then guess what happens? Price comes from the resistance, we have a bearish engulf in here. After price closes, you enter a sell opportunity. Before you know it, price rate coming back and it's coming almost to your stop loss area and you can't breathe, which is something very unhealthy, right? So if you come and say, okay, price not giving me this confirmation, what other possible confirmation can I take, right? So you have at least 2 or 3 confirmations, because the market will offer different confirmations in different market conditions. So you have to be a bit, how do I call it? You have to be street smart, right? Street smart with the market, because the market, it's dynamic. It's not fixated. It's not like it's going to do everything all the time. No, you have to be that flexible in the market. So this USDJPY, as requested for from Eccentric. I hope you're putting the ideology. I really hope so. And by the way, just in case you feel like there's something I've explained, you're not quite understanding it, you can feel free to always ask in the comment section. Just feel free with the comment section, right? It should be your playground. Assume it's just, don't worry, no one is going to punish you for coming in the comment section. So yeah, guess you feel like there's anything you'd like to put across, you'd like me to explain deeper into on the chats as well, trading related strictly, of course. You definitely just drop it down in the comment section, and then we can I say how best I can be able to assist or answer your questions as well. Then Lina Mohonja says GBPUSD. All right, so let's go to GBPUSD. GBPUSD, here we go. All right, so this is some analysis we had, I think, when we were ending out last year. And by the way, in your free time, you can always go down and check out the Bullish Banter podcast in your free time as well. I don't know what you could do with your leisure, but podcasts are one of the best things you can always look at. Now, for us traders, trust me, podcasts like the Bullish Banter come in handy, because a lot of the problems we face are very similar in different capacities, but they are very, very similar, but in different capacities, right? Someone may be crying capital when he's looking for $100 as capital. Someone may be crying capital is looking for $700 capital. We're all going to blow accounts, part of the game. We're all going to take losses. We're all going to get emotional at one point in the markets. Like, these are things that happen to us as traders on a daily basis. And one of the best ways you can figure them out is from listening to different trader stories, right? In fact, I would like to say engaging with these stories, because I don't know, sometimes people just listen to the podcast, but it makes a lot of sense when you actually learn to engage with the podcast. You go down to the comment section, you even just put out your feelings out there. It helps release, how do I call it? It's like a dopamine releasing of a sort. It just helps release your energy. Most other than being there on tension. So go out, when you have time, just go and check out the Bullish Banter podcast. That's very important. It's a very nice podcast. We have an episode that just came out. I'll show you at the end of this session here. I think it's an episode that everyone needs to watch out for. We have a very interesting female trader talking about her experience in the market in over 6 years. Also, I would encourage you guys to go and watch that episode. It's a very interesting episode. And in case you want to just engage more on most of those podcasts, we have a Bullish Banter Telegram channel where you can always come in and, of course, share a bit of your insights and what you're thinking about in the market. And there are different people in the group. They'll try to engage with you. I will try to engage with you. The team from here will try to engage with you as well in the Bullish Banter Telegram channel. So under those podcasts in the descriptions, you'll always see the link here to the Telegram. So this is GBPUSD, and we can see that it has been creating higher highs, higher lows. Very basic, right? Higher highs, higher lows, higher highs, higher lows. And this is a daily time frame. So from last week, as I was mentioning earlier, we saw that the non-farm payrolls came out. We saw that non-farm payrolls came out and they were less than expected, less than the previous, bad for the US dollar, and of course, good for the pound. So you can see that the pound that was showing that last week for about 1, 2, 3, 4 days, the US dollar was getting some strength, but all of a sudden we're starting with a dollar weakening because of course that news event, and then of course the articles read earlier, they were hinting a lot on the idea that the investors all over the world is questioning the Federal Reserve Bank's independence, right? And of course, we saw Jerome Powell giving in a bit of defense, saying that Trump just looking for excuses for him to cut rates. Of course, he wants the rates to be cut. Of course, Wall Street wants the rates to be cut. Of course, the investors want the rates to be cut, to be cut down, sorry, so that they can stimulate economic growth. But based on the markets is now showing us what their reaction is like. So we are seeing that today's trade with very strong bulls to the upside in GBPUSD, and I expect that to be the case for the most of this week. I believe we do have inflation data coming out this week. So until inflation data comes out, we expect to see price target this high. It's a daily time frame, remember, on GPUSD, it's a daily time frame. So until CPI, I expect us to try and move towards this high, right? Then it will be CPI that will definitely decide if price pushes to the downside, giving the dollar a bit more strength, or it actually goes through that side to the upside and takes out or sweeps out or washes out the whole of these highs to continue the GBPUSD bullish move as well. So it's on a daily time frame, so we can now break down to our 4-hour time frame and just look at what's going on. So it's always very important, usually when you look at a move happening on price, because that price trying to push to the upside, but it's always very, very important to look at the origin, right? To look at the origin of that move. So if price has given me a correction, then you should have been looking for some kind of like demand zone or demand level, right? So when you come and look at this carefully, so I have here what we call double formations. For the guys that have been to the classes in Uganda, this is something we have spoken about a lot of times, the double formation, right? Something we have spoken about a lot of times. And then you can see there's a red candle here with a long wick that still doubles down as a demand level. So I'm going to take the double formation, because of course when you go to a 30-minute time frame, we shall find their demand level. Now we have seen the origin, right? So of course, if the line up here, the dotted line above here is our overall target, or the area that's drawing price up, right? The magnetic area, how do I call the price magnet, is the one up over there, right? So what do you expect this area to push price all the way there? Now, for price to go up there, it will rarely go in a straight line. There will be some kind of correction moves. There will be some areas where it will perform a break and retest. So I want to look for those possible areas. The first one I'm going to is going to be this high. We have this high. So we have another high right around here. I'm going to take this one instead. So there are two highs price must definitely take out of and then continue pushing to the upside. Looking at the most current 4-hour candlestick, we are seeing that the bulls are really strong, or the bullish momentum is really strong. So I expect price to continue pushing up, probably into this area before it gives us a retracement. I expect the retracement to come in around these areas here, push us slightly down before we get another push to the upside. So going down to the 30-minute time frame. Going down to the 30-minute time frame. So as I mentioned, when you come to the minute, you'll be able to clearly set demand level within this area. So you can set demand level is there, and nice and clean and very easy to spot. On the 30-minute time frame, it's right over here. And then price, of course, came into it. Sorry, guys. Pushed us over there. So right now, what are we looking at? We're looking at price giving us a correction move to the downside, lower low, lower high, a bit of manipulations around here. And then inside this demand level here, that 30-minute demand level, what does price do? Tries to consolidate a bit. We have 1, 2, 3, 4 candles, and then it pumps all the way up to upside on 1, 2 candlesticks here, right? This is an hour candle. It pumps all the way up, trying to take out these other highs. What you can see that price is taking out these intermediate highs and still trying to do a wick fill around here. So what I'll be looking for is what areas below I can buy from when price gets back to them, what areas I need price to break out of for me to look for buying opportunities. So I'm going to first go back to the 4-hour for a little bit. Let's look at something. Okay, so from this side here, what you can see here, if you draw a trend line, is that there is a trend line, a nice trend line and a trend line break. So you can see this trend line right over here. You can have a trend line over there. And you can see what price did, one touch, two touches, three touches from that week in and out. And then of course price comes and breaks out, gives us a nice beautiful retest again at around that double wick formation. And then we are seeing now price pushing to the upside. So I have nothing. I have no doubt price actually pushing to the upside, even on lower time frames. So you can see it's another double wick formation, so a lower time frame demand level. And we're seeing that push to the upside. So what I'm going to look out for is one or two things. One, either price breaks above the supply level, then I can now start looking for break and retest for price to push to the upside, right? But as you can see, price is rejecting this area here. So if price rejects this area, what do we have below here? We do have this demand, and then we also have this demand right over here. So these are my two buying zones. Of course, as I mentioned earlier, you need to have at least 2 or 3 confirmations. That's something very, very important. The beauty with confirmations is that when I have these kinds of zones, and I have 2 zones that look good enough, they both have imbalances, they both need to break those structures. What is left to be the screener for me to get the best possible buying zone, right? It's definitely going to be my confirmation. So the idea at the end of the day is price gets into the area of interest, and then I look for a viable confirmation that actually aligns that area there, or in the market direction I'm looking at. That's when I now take my opportunity and take that particular trade. So I have these 2 demand zones, and they're the ones I'm going to be watching out for when price gets to them. So there are 2 demand zones and 1 resistance area. I'm going to take the supply as a resistance. So what I'll need is price to break above that supply, and then I'll wait for a correction move, and then of course taking our buy based off confirmations, guys. Very important. All right, so kindly, what's your insight on ZAR-USD? I'm bullish on it, very bullish on it. I'm very bullish on gold. So for the guys who are with us at the start, I think you very much remember the articles we read, and they're speaking about safe haven demand. This is the safe haven gold. It's one of the safe havens. Very nice pair to trade and to hold value. It's been appreciating for over the past 40 years. That's 4 decades of it, just appreciating in value. So what you can see here is price did give us this low high, lower low, high, higher low, higher high, right? Forming some kind of head and shoulder, meaning it's a reversal pattern on a higher time frame. And now what can we see that price is pushing to the upside. Now when you look at the most recent price action, or just the price leg alone, okay, all right, so when you look at the most recent price action or the most recent price leg, realize price is just giving us an uptrend, right? Of course, gold has been bullish, but price is giving us an uptrend, but this will be an internal structure because this over here was the highest high price had formed initially. So that was the highest point price had formed initially, and that will be our break of market. We call that BMS, right? Then what you have below here will be a break of structure. So right now what I'm looking at is basically this gap up over here. If price is to come back lower, it will definitely come back to fill up that gap up. But other than that, let's see this. Price can actually come back and do this. So we have this gap up, price can come in to balance this in. When I look at this candle here, it means that this area they were just taking up we're just filling up the liquidity on this week here, right? Which means there is not much liquidity around that gap up, but below that gap up there is a demand zone. That's our whole demand zone. And of course, in the demand zone, you'll be looking for buying opportunities. I'm going to take two demand zones, just like we did on the previous chart, because then I have a variety of options, and I won't just wait for which of those options gives me a confirmation. So it's just about being calculated, right? Yes, I have 2 reasons, but what am I using to screen out my zones to look for the best possible trades? I'm waiting to see which of these zones actually offering me a confirmation. So these are the 2 zones I'm watching out for in regards to gold, but this on a 4-hour time frame, right? This on a 4-hour time frame, so I'm basically looking at a long-term perspective. Is it long term? It's not very long term. All right, so what do we see on a 30-minute time frame? Here what happened, price has given us a breakout, left us a small tiny demand level there. The later came back and respected and pushed us all the way to that area, as we can see where price currently is, right? And right now what we see price doing, it was trying to give us a correction move, but then put a bit of resistance or support came in around here and price trying to push to the upside. So looking at the structure here, we have these highs that price is only just retested. And once if price can break out of that, then you can wait for a correction move and then continue pushing that market to the upside as well. To the downside, we have seen that gap up in some areas. Though here we are seeing more of a small demand level price come back to mitigate, but still has a gap up right after that, this gap up here. So either way, price is most definitely likely to come back to fill in that gap up in case price doesn't go through this resistance area here to form new highs, or if it gets to a difficulty breaking above that resistance. So let's do the same thing. Prices are hovering right below this resistance level here, and I'd like to see it break that resistance there, or if not, reject it and now push us all the way down to fill in this gap up and probably give us proper buying opportunities. All right, so hello, thoughts on GBPUSD and NZDJPY. We have looked at GBPUSD, so I'll look at again. I'm going to first look at your USD, then I'll look at NZDJPY. So let's start with a euro. All right, so this was a summarized thread from last year. All right, so this was for this daily time frame. So it's similar just to GBPUSD. Price going up and give us that correction move, and now it looks like it's on set or set on to actually push to the upside. When I look at this is the origin. There's a breakout here, an imbalance. Then now price came back and gave us this correction move, kind of like what we call a round retest. Price is doing like an arc to come back to an area of interest before it pushes to the continuing direction. So look at this trend. This candle is very, very bullish. This candle is very, very bullish, as you can see. So you can go down to 1 hour time frame. Come down to 1 hour time frame. You can see that price has this spike up, giving us a break of structure, and then giving us a small pushback and a break above. So that area there will come out first, a demand zone. So we have this area is going to be our first demand zone. So of course, if price happens to come back and give us a correction move into this area, so you can now look for confirmations and definitely look for those buying opportunities. Of course, upon confirmation to push price all the way up. I like having two zones at least because I won't always rely on a confirmation to know whether a zone is actually legitimate or it's just there because the market moves up and down. So I have two demand zones that I'm waiting to see if price can get into and definitely give me a bit of correction moves. And then of course all confirmations that can push me to the upside. So I'm still bullish on GU and EU, basically because I'm bearish on the DXY, right? Because they're directly correlated. All the three pairs actually are inversely correlated, sorry. EU and GU are directly correlated, but they are both indirectly correlated to the dollar index. So that means when the dollar index is buying, these two will be selling. If it's selling, these two will be buying. So right now we have a selling perspective on the dollar index. That means we shall be looking to buy into these two pairs, GU and EU. So then of course someone has asked for DJPY. Alright, so this is a weekly time frame on DJPY. So you can see that last week was a bit of, how would I go, an indecisive, kind of almost like an indecisive candle. But this week we have taken out last week's high. Took out last week's high, let's see. And we already taken out Friday's high as well. So last week's high was taken out, last Friday's high was taken out. Okay, so let's look at the structure. So that the price was pushing up here, and then it gave us a correction move here after, of course, a breakout on the left hand side. We had this breakout structure. This was the low price that provided us down here. And of course, we need a correction down to a demand level. Price doesn't look like it did get into the demand level we're looking for, but you see, let's see this. Actually did by the week. Actually did get to the demand level and then pushing to the upside. So right now, we're seeing price has closed above this high. Has closed above the high. So we'd anticipate a correction move to the downside, right? Would anticipate a correction move to the downside before you look for buying opportunities. So one thing I would like to do is to confluence this as well. Then I'm definitely going to come and have. We have this demand level here. So I'll expect a push down into that area before price continues to the upside in simple terms. Then from there, so this is what I would be expecting when DJPY has pushed down into that area. That's a 4-hour time frame, and then a push to the upside. So let's look at the 30-minute time frame to see what will happen if price picks up bullish momentum before getting to the area of interest that we're looking out for. So pretty much I would like to just refine this area a little bit. I'm going to just refine into this area, particularly up here. That's the area I would expect price to come into. Then now give me a buy to the upside. Of course, I want to be based entirely off confirmations to take the best possible trades. So I think I would like to look out for is the conditional bias, which basically what does price do if it doesn't get to the designed area, right? So I'm going to have this resistance here. The other perspective would be price breaks above this resistance, gives me a retest and continues pushing to the upside. Alternatively, it sells down to my demand level. I pick up a confirmation and then take a buy opportunity based on those criteria and those factors that the market would have definitely given me as well. So this is GBPUSD. Then I believe we shall, of course, end it with CADJPY from Clavy. Let's see. Okay. So it's now the time frame. Because on CADJPY we are seeing a bit of a bullish, of course, with some bit of correction moves. Then we can look at this kind of indecisive candle. The wick to the downside is relatively way bigger than the wick to the upside and relatively bigger than the body, meaning there's a bit of bulls coming into the pair because it has likely been bullish, though we have seen the previous 2 weeks being ending a bit of bearish, meaning that Japanese yen is starting to gain some strength against the Canadian dollar. So what can we look at from here? We're going to look at the origin first. What did price react to start giving us these buying opportunities? So this price is demand level here. One first look at the origin of this. Okay, so this demand level here was the one that price used as the origin. So what can we see as that price has given us a breakout from this side? Of course, this being a high, a low, higher high. Here it's like a triple top almost. Then we see price starts giving us a correction to the downside. So we're going to focus more on the most current price action or the okay. So as you see price coming into the demand level, pushes out, gives us a shift, gives us a breakout from here, and then here taking out these highs here as well, right? So the market has taken out those highs. What do you want to base on to look for continuation opportunities? What you're going to look at is that price is getting a bit of difficulty breaking above this high, but it surely is trying to sort of look for is to wait for a break above that high. When we wait for a break above that high, it becomes a bit much more easier to start looking up for the opportunities and buy case scenario and see if price can go ahead to form a new higher high. Now, if price goes to the downside, remember it's a 4-hour time frame. So let me first make this short. All right, so now on the 30-minute time frame, we have this area that will look like our support level. We have this. What you don't look out for is for price to break below this, and I can look for bearish opportunities on this particular CADJPY pair, but I'm pretty much going to be looking for those bulls because we have seen that the larger time frames are mainly bullish dominated, right? They are mainly bullish dominated, so you can't compare the number of bullish candles to the number of bearish candles. Same case applied with DJPY. The number of bullish candles was way greater than the number of bearish candles. So you can see this as well. The number of bullish candles supersede the bearish candles. So that's something I'm going to be looking out for in CADJPY as well. So once again, I would like to remind you guys, don't forget to sign up for different free classes and lessons. If you know a person out there wants to get into advanced class, it's at 11 a.m. The Zoom links are in the description. And I begin a class at 8 p.m. to 9 p.m. Monday to Thursdays. The links as well are in the description, as you are in the description below, of course. At the same time, we also do have physical classes in Uganda and then Tanzania. And the location definitely is our FNB house for Tanzania, third floor. And then, of course, Uganda rebuilding the Mumba Avenue as well. So I was talking about the bullish pattern earlier on. So I'm going to just share it a bit on how you can always access some of these things here. So you can feel free to sign up for those classes. You know, a person or two, you have a couple of friends you're trading with, don't get tips from them. We can all thrive in this industry if we're helping one another, right? So go ahead and you can let them know, share the links with them as well, so that they can be able to get the same services. And of course, maybe someone just share the screen in a bit, just a second. Right, so it's coming up in a bit. Yeah, so this is what I'm talking about. Let me first mute this page. Okay, so this one of the best episodes you can watch out for right now. 6 years of trading from a female trader, right? Yeah, so you can always go and watch this out. Very interesting insights. We also have sorry, this is a bit sensitive, but then you can go and check this out as well in the descriptions. In the descriptions over here, you'll be able to find our community. The Bullish Pattern Telegram community is over here. You can create your FXPesa account with a link right around there and take advantage of the Caribou bonus. Then if you want to be a guest on the Bullish Panther podcast, of course, there's a link for you as well. In the Bullish Panther community, you can actually even share your insights on what you learned from this episode. It's one of my best to start the year with. I don't know about you guys, but you should watch it out as well. Yeah, but there's a variety of things you can look out for on our YouTube channel. I also have different links. There's this if you want to start trading. Of course, I have a price action, basics that you can always look at. How I start doing my best price action on this. Very simple techniques on how you can approach the markets. You can watch this as well. And then, of course, you can share the point start into the markets as well. Then we do have a link in bio over here. Learn how to trade. This way you can access all our services from the different classes, the upcoming webinars, all the links are in this link in bio. So you can be able to actually access all of them. You can even just keep it in your notes or keep it somewhere where you can always access it. So that's the link in bio, how you can access it, as well as all our different social media platforms. So you can see these physical classes, Uganda, Tanzania, you can sign up for them, YouTube resources, and then of course, Financially Incorrect, Bullish Pattern podcasts. Other than that, I wish you guys a very bullish year. We have started there and there is no turning back. So I wish you guys an amazing week, a full week. The guys in Uganda, don't forget to, of course, go do what you need to do this week. The guys in Uganda, you know what this week means. It's a voting week. So you go vote, go home, stay safe. And then we come back and chop the markets and see what opportunities are there. I have a feeling it's going to be an amazing year. And I don't want to leave you guys behind. So make sure you're always locked in and tuned in. Until next time, I would like to wish you guys an amazing day and all the best as well.